All righty, welcome everyone to the Hurley Investments Market View Commentary for Monday, the 20th of April. As I just said before we started, I'm excited to be here today. I picked up some new information. I've got a little different perspective, and I'm still a little frustrated with the website from E-Trade, but we're locking it down, and we're presenting some stuff to E-Trade so they can get their website fixed and not have so many problems or issues with the pricing of their options right now. With that said, I was just going to say I'm excited. We have S&P futures up 6.5, the Dow up 34. If I look at my overall S&P 500, guess I really don't want the futures. I want the S&P 500. So let's go to markets, US markets, S&P 500. We're still down, what, 13%? 12.62%. We're down 15.21% in general from the highs of the market. So, other than that, I'm kind of excited. Now, I'm going to go through things in a little bit of a reverse order right now. The way I thought I was going to start this has changed because of some new information I've been given. And again, I'm going to continue to build on what I said last Thursday. If you didn't see it last Thursday, go back to My Hurley Investment and look at last Thursday's. But I got some information, and I want to title this, I need to give proper credit. Let's call it Knowledge of the Future. And it's from Howard Marks. And I'm just going to take a little piece of it. I might suggest that some of you want to hear Keith talk some more about this tomorrow. Send me a message so I can present to Keith and say, hey, Keith, people want to hear you tomorrow night talk a little bit more about it. But plain and simple, this Howard Marks had an observation from Mark Lipstitch. There we go. And that observation was about, how would I say it? The world, let's do it even differently. The world of investing. And let's start off today with the world of investing. I'm a little bit disappointed. As my world of investing started today, I thought, man, we're going to see some good news. We're going to see a rebound from the 500 points down. And dang it, if Disney didn't get hit with a double whammy today, in regards to 2 downgrades. And not only was it 2 downgrades, but it was 2 ground downgrades from some relatively important analysts. One was UBS. UBS downgraded Disney to neutral from buy. And dang it, I can't remember who the other one was, but it happened more towards the middle of the day. Primarily because they're furloughing 100,000 employees in regards to the entertainment section. I'm a little worried because almost a third of their business comes from the theme parks. And obviously the theme parks are probably going to be closed for a quarter of the year. So if you do the math, 28%, we're looking at maybe 7 to 7.5% of their revenue is not going to be there for Disney. And my question is, well, why the hell aren't these guys getting a market valuation more like Netflix? Or since now half their business is this media entertainment, Disney Plus only benefited what they thought they were going to take a year to do. They've done, 125% better. They got 500 million subscribers. But then you got these dummies that are saying, well, but 10 million of them are Verizon subscribers that aren't paying. And I just want to grab these analysts and say, you dummy, they sure as hell are paying. It's just being paid for by Verizon. And yeah, it's probably at a discount. Probably, instead of $60 a year, it's probably 50, right? Let's even say it's 40. 10 million subscribers, 40, $40. You're talking about a $400 million payment. They'll get hooked. They'll be on it again. And I was confused. I'm confused on, for crying out loud, how can people not get this? And what it really comes down to is nothing more than these 3 points, which are lipsticks observation. And there are a lot of other ones that maybe Keith will go over with you guys tomorrow, but just common sense. There are few, if any, facts regarding the future, right? We talk about this all the time. There are no crystal balls. That's why we do a lot of color trading. We've told you in the past, hey, you know what? I'll be 100% honest with you. I don't always know or even have a good read, like right now, on what's going to happen in the stock market. So we buy your stock ownership and we add protection, especially when we start. We add some protection when we have earnings, when things are falling down in the market. There's a lot we do to protect you from downside movements. Some people get frustrated. Well, why do we have protection on? The market's going up, but the stock got good earnings. The reason why is because there are very few facts, if any, regarding the future. They're just not there. Really? I couldn't see myself going to the card reader ladies or paying a 1-800 hotline for stock market tips to knowledge. It's just not there. Some people call this market volatility or market uncertainty. To take that out, we do actually 3 things. We collar trade or protective put. We add protection around earnings. We use leaps. For those that want to be fully invested and want to have some diversification, we go to leaps. We buy 2-year positions out in time that are between 9 to 13% of the cost of the stock, so you can't lose 50% of the value of the stock. Kind of a no-brainer, right? We also know how to adjust. And you don't always adjust to profitability, but you do give yourself the opportunity to adjust a trade that if you completely just blow it, you can fix or adjust it to properly fit the trend to less of a loss, to a break even, to maybe a small profit, or maybe in a large profit. Now, there's something else that we do, and that comes to the fact that the vast amount of our theorizing, right, or trying to use theory about the future consists of extrapolating from past patterns, right? All it's saying is technical analysis. All it's saying is that we're trying to use some past history to find patterns. The last time we had past history or a pattern for something that we might have going on right now, that in all honesty, we probably don't have, goes back to what? The 1918 Spanish flu, when the stock market was nothing like what we have it as right now. In fact, where was I going to find that? We never had, how am I trying to say this? Give me a second. Give me a second, because I can't find what I want to find. Well, I can't find it, but I guess it really doesn't matter, because it really comes down to a couple things. Spanish flu, 100 plus years ago. Our stock market, the way we trade it, the way assets are gathered, is nothing like what we're dealing with today. We have a recession coming of some kind. You know, we had the Great Recession, the Great Depression. There's all kinds of things that it could be, but plain and simple, this is a different kind of recession because we've already thrown $2 to $4 trillion at it. Today we ran into oil, right? How cool. If you could take a barrel of oil, in theory, they would pay you between $36 and $37 to hold on to it, but you'd have to take delivery tomorrow. I don't know how they would give that to you, if it'd be in a barrel of oil or they just dump it out on your lawn. But off you go, right? And when I think about the Fed backstopping the United States, we basically have a world that's shut down and all kinds of governments now at the same time backstopping their own countries. One more time, in my 14 years of managing money and 23 or 24 years of being in the stock market in general, we have a first time, never been seen assessment of what's happening in our market. And the honest answer is, and someone just made an interesting point, but I'm going to disagree with it. Past history is useful for 97% of the time as a guidance, but for extreme situations, you can only rely on human nature and human ability to stay dumb. I love it, but I'm going to disagree, because each coin flip is not 97%. It's a 50-50. And that's the reason why Elliott waves and Fibonacci's aren't consistent, because each wave is not a 1 out of 6. It's actually a 1 out of 2. And there are other factors that affect it. Different news, different CEOs, different ways to break the law, different ways to misrun a company. The odds are probably even less than 50-50, because there's some level of uncertainty with time in there, that the odds are not in your favor. which comes to the last part of Lipstick's understanding, or what he basically said here. And that comes down to opinions are nothing more than lots of speculation. There it is. So when I thought about it, right, past opinions of my money managers, nice space there, right, were these. Just wait it out. Well, I've got an article that goes back to 2018. That 8-year period, or excuse me, that 18-year period, a dollar that sat and was invested in 2000 still hasn't doubled. And if you take out the cost of the doing business, which can be ginormous over time, especially with mutual funds, not only have you lost money, but you even lost against just inflation by itself. So just wait it out, kind of ridiculous. It's the market's fault, not mine. I put you in a fund, I got paid a commission for it, I churn you out of it every 2 to 3 years and go find a better one for you because I worked so hard. Or maybe a different understanding is my boss told me, my manager, my managing partner told me, hey, if we go put $10 million into this mutual fund, we'll get a $500,000 bonus and I'll give you half of it, right? Half of it. I'll give you a tenth of it as a bonus. They don't give out nearly what they should to people that manage money. It's not, it's the market's fault. It's not mine or my fault. The last thing is things changed. And they're always going to change. They will always change in the stock market. As you look at some of these last crashes, right? Vietnam, industrial crash in 79, 83, you had the mortgage crisis, 87, the oil crisis. I don't really remember 93 or 96 if there was a crisis, but 2000 you had the dot bomb, the financial crisis of 2008, the coronavirus. And I really hope we go look back and laugh at this and just say, man, all it is a bad version of the flu. But last Thursday, a couple people were freaking out. I'm not going to name any names of anyone that's here tonight. I'm afraid of what might come out of this. Come on, give me freaking. Someone type in how I do freaking. F-R-E-A-K-I-N-G. There we go. 15% down stock market. And you were down 6.7%. The stock market was down 35%, and you were down 15%. So I want you to put it into perspective. Your options are really to sit and wait it out in a mutual fund and take these losses, if not more, or you're going to welcome the collar trading opportunity. So you can sit and watch your portfolios do worse than the market in funds, or you can join the collar trading group. And I'm just going to put options in there, right? So less risk as you enter leaps. Protection on positions. Dollar cost averaging without having to add more money to the account. And you know what the best part of all this is? What's the best part? What's the best part of all this? Give me an idea. Your Monday morning, I like it. I'm going to put that in the maybe category. Maybe it's the Monday, you said Monday morning, but I'm sure you're saying Monday evening webinars, right? Doesn't take as long to make up the losses. Agreed. A Warren Buffett investing style. I like it. I agree. Get to amass tons of shares for covered calls, dividends, and future growth. I love it. Anyone else? What's the best part of joining the options part of managing funds? Hate you, Lance. Occasionally, I won't throw Keith here. Occasionally, Kevin gets to swear at you. Oh my gosh. Okay. I love it. But what I was going for, in all honesty, the best part, your money managers spend countless hours reading, researching, crunching numbers on a future that doesn't care one bit. The fact of the matter is, everything and all this time that Keith and I spend, and Jeffrey T. Smith at that in the past Mike has done and Joe Durkel. I mean, in all honesty, we're all creating opinions about a ton of speculation that facts have no regards to future movement whatsoever. It's still a coin flip. It's still a 50-50. So last Thursday, I was trying to bring this into a understanding. For two of you, you're a little bit worried. One, I hadn't dealt with this before, but I wanted to talk to you about survival in the stock market. And I'm going to relate it to survival in life. And I've changed a couple things here, or I'm going to add a couple things that I think is important. And the first thing I wanted to add, that whenever you find yourself on the side of the majority, it is time to pause, reflect, and reassess what you are doing. We always talk about not being herd mentality, right? We always talk that when you're being stretched, when you're testing the boundaries, what if during this time period you thought about, hey, what if I did the opposite thing for 48 hours? What if I look to do something different that maybe the masses, or maybe that I don't spend my time doing right now? Because not everyone is experienced in making life or death decisions. And the first point is realizing, as much as the stock market might feel or might be, it's never a life or death situation. It's extremely different than being shot at. It's extremely different than being a soldier, a firefighter, a policeman. The decisions you're making in the stock market, or even the money and what it does in the stock market, is never a life or death situation. There's no reason to go jumping out of the window. It doesn't mean it doesn't hurt, but it doesn't hurt as much as a life or death situation. In fact, I'm going to use this one, and I think it's a rather, I think it's a rather interesting comment. Navy guys, the only easy day was yesterday. Navy SEAL guys, the only easy day was yesterday. And it's only because it's done and you live through it. The only easy day was yesterday. Today was not an easy day in the stock market. Today was not a day for the faint of heart. We knew we were down 500 points the previous night. We looked like we were going to do better. We looked like we were going to come back. And in all honesty, we did come back. So the question is, how do you learn from it? Do we consider what are the worst things that can happen? And more importantly, could I do something different so I never go back there? The funny thing is, that's an oxymoron. You could do a lot of things different, but that never means that you'll never go back there. You don't know, right? I found it pretty interesting. There's some of us here that have confronted death numerous times, and you kicked its butt. There are some of us that have looked death in the face and have said, not today. The funny thing is that sometimes when that death comes, that you could be so beaten down that you have two choices left. And I think the stock market feels the same way. Do you give up and just let it die? Or again, do you decide to live and find something different to do? But for some people in life or death comes down to a decision. You have two choices and only two choices. And those two choices are really, they're really simple. It is simple as can be. Are you going to choose to live? Or are you going to choose to die? Bill calls it fight or flight. Flight might mean getting shot in the back, right? You might be so beat up in a hospital bed that you couldn't flight or run out away if you wanted to. But it's a choice. And the choice is, when you get kicked off the horse, do you get back up and ride again? I was going to use some of the cliches that some military training can help you succeed, but let me just go. If you get kicked off the horse, do you get back on? I kind of find this one hilarious. Some people like to say losing is not an option. Of course it's an option. Believe it or not, there have been trades that I've put on that I just haven't won on. I want to win. I might win in the future, but sometimes it takes too long. Sometimes I can't wait for the trade to come back. Sometimes I won't wait for the trades to come back. But losing is not an option. That only happens if you give yourself an unlimited or a huge time frame to be able to do that. But you know what? When you understand losing is an option in the stock market, it sometimes makes it easier. Something that I still remember and that I love or learned way back when. Little successes will add up to a big win. This is funny where people try to tell you in the stock market you should always just try to hit singles. I beg to differ. If you got a home run and you have a stock running like no tomorrow, you're an idiot if you get out with a 20% return on a trade. When you could make a 5,000% return by letting some winners run. keep typing the wrong thing. Problem with being over prepared, right? Anything made up on the way down is a profit on the way back up. I agree. It doesn't mean that you won't maybe lose on a long put on the way up, but anything you make up on the way down is a profit on the way back up. Well, wasn't it a profit on the way down? Damn right it was. It's also more of a profit on the way back up, especially if you can add more shares to it. And the key, what do you need to succeed in the process of bottoming in bear markets or in life? And that's a personal question. That's a personal question that's different for every single person. The neat thing is, I'm just going to let you guys read through most of this. In all honesty, I would be foolish of me to try to suggest that I know where markets are going to go this week. So once again, I'm going to put some question marks in here. But if you ask me how I'm looking to trade, I'm protecting through earnings, rolling long puts up and out, and I wouldn't think of not having protection on during an earnings season that so far has no forgiveness. There has been zero forgiveness. You want your example? I'm pretty sure IBM is down today. I'm pretty sure IBM not only did it not meet or beat, it also, why is this not working for me? Because it's thinking. Yep, it also pulled its guidance for the year, and so it got whacked for it. CEO, new CIO emphasizes growth, not earnings per share, and first earnings call with analysts, and it pulled back its guidance for the year, which makes sense because any guidance for the year is just going to be bogus anyway, right? I can and might be adding short calls after earnings for a little extra credit. There's no way I want to cap Disney when it's traded as high as 155, Apple when it's traded at 325, Baidu when it's traded as high as 200, Visa when it's traded at 228, Ford when it's been as high as $10.50, Under Armour when it's been as high as $42, American Outdoor Brands Corp when it was at $13.50 not too long ago. I'm not interested in capping anything but the huge upside opportunity. But I might add some short calls on for a little extra credit, for a little opportunity to make something after I've seen how the stock market's going to beat it down. Two good questions, and I like these questions. One from Lance, one from Abraham. As you say, losing is not an option, but reality always rules. So do you average cost trade any stock that you think might not return to a better situation in a reasonable time? How do you decide that? So yes, I dollar cost average stock ownership with the profits of a long put. I dollar cost average leaps with just cash on hand. So at any upside, I can get back down to my original trade. So how do I decide that? There are times like 2 years ago, Keeve and I had to roll out. We had to, everyone that had 10 Bank of America leaps went down to 3. As we condensed that money and rolled it out in time for another year's worth of time, so we can then see it go from 24 up to $35. So there's numerous different ways to do it. But as you said, the key is that you can do it. And Lance makes a second question or a second comment. And the question was, well, Kevin, when you're wrong, how do you make it into a right? And again, usually what that comes down to, Lance, is if all the information gave us a false negative, right? Or a false positive, I guess would be a better way to say it. If it gave us a false positive, and even after beating earnings per share and beating revenue and giving guidance, and the stock still falls down, you just change the direction, you can call it the delta sometimes, of your trade. Hey, if you're slided more bullish, turn it more bearish. You can add a couple more contracts to positions going down. You can write it down and make up. The farther down you go, the more money a long put's going to make for you. There's a bunch of different things you can do that when you, as you said, guess wrong, right? You get a false negative or a false positive. You have to be willing to admit to yourself, may not be humble, because I'm not sure humility has a good place in the stock market, but have the common sense to tell yourself, hey, this is not working the way it's supposed to. What can I do to change the narrative? It's my belief, and I think my belief still comes to these numbers. And let's see if it's changed on me yet. It is still my belief that we need to see our numbers come down. Man, that's just ugly, for crying out loud. For all these people that thought, hey, you know what, we need things to come down. We had people right here saying, hey, we're plateauing. And they really thought they were right because of that day right there. So 3 weeks ago, all those people that thought we were plateauing and were on the downside, wake up and face reality. 5 days above 30, and I'll be honest with you, hey, we're going down. 3 days in a row, we're below 30. We could be heading back down. Guess what? We never tested the lows, right? Day up to 30,000, 29, 28, 33, 28. I like 26. I was like, man, could we keep going down? Not really. Not really. So, just something I'm thinking of, and I'm thinking out loud. 28,123. I think for the United States, because we're greedy, because we're going to have Georgia come back online tomorrow. Things are going to starting again, right? I think it's going to take longer than we think. And so I guess I'm kind of convinced we're really not going to see a V recovery. In fact, in all honesty, it might come down to the fact that it looked like we were going to go to a W, but we're probably going to go back and test not the low lows, but I'm going to call it our second lows. We probably won't go back down and test 2191, 2100. 2,200 even. Probably not going to go down and test those. But it wouldn't surprise me if we test the 25s. A lot of talking heads talked about that today. And I kind of giggled because I thought, what the hell do you know? Don't you know that you don't know? Don't you know that there's no facts regarding the future? Don't you know that you don't know? But it seems like we're not going to get above that 50-day. It seems like we're running up to it and we're hitting it. We have a hard time at 50. I just don't see us getting above the 200-day. So let's prepare for the worst. Well, this time around, I might just hold on. No matter how expensive long puts are, I might just hold on at long puts a go right here and see how we run them down to 2,500. Oh, but they're so expensive. And we might have a big up day and give away a lot of our profits. Yep. So I might just bite the bullet, spend a crap load of money on long SPY puts and just let them run down. And the one day that the market bounces up and we lose half our profits in them and the VIX shrinks by 15%, I'm just going to ignore it. I'm just going to spit it out of my mouth. I won't worry about it unless I don't have any profit in it. So I'm trying to prepare for a worst case scenario. If things keep going up and I'm wrong, awesome. Let's see some things recover. I'd really like to see Apple back up, Disney back up. It would be wonderful. I've added shares all the way across the board on just about everything. Nothing share-wise has not had more added. I've added extra leap contracts on just about everything. I can't think of one thing that's a leap that we haven't dollar cost averaged. In all honest, we're cheaper today in every stock position that we own. We're cheaper today in every leap position that we own. So I can just manage it to cut that risk back and or push it into next year. We might have a better opportunity to be significantly profitable. Significantly profitable because we added 20, 30, 40, 200% more shares of stock in some situations, because we've doubled, tripled, quadrupled up on our leap positions so that they don't have to move nearly as far to get out on a break even. Kevin, talk to me about leaps. If we've quadrupled your leaps, as soon as we get to a break even, we're going to take half off. And at a profit of a 25%, we're going to take half off. So you'll be back to original contracts that are up at that point at least 50%. It's just smart money management. Well, isn't that a time that you let it run? Maybe. But we're more worried about preserving capital than risking capital at this point in time. And it's just down to common sense. So guys, I'm going to publish all this out there for you. I've got some really interesting articles that I think you're going to enjoy. Those articles are 401k fraud, how to worry about some phone calls and some people that are trying to get your 401k money. Dr. Gupta knows I caught someone that tried to do it via email and calling in, but we knew it wasn't him and we found it pretty easily. Bank of America posts a 45% decline in the first quarter profit, braces for big loan losses. I'm a little shocked as you go through their Schedule K and their accounting. They're setting aside $3.6 billion for loan losses, which in all honesty is double what they originally had set aside for 2008. So I'm a little shocked that people are better qualified for their loans, have higher credit ratings, have more money set aside, that they've done all this bullshit in Dodd-Frank and made it so much harder for people to refinance and get into a home. Yet what they're saying, in all honesty, is all that was bullshit, not going to help anything out. In fact, they're planning on twice as many losses of people giving up on their loans now after they did all this bullshit to supposedly make it safer for the markets and safer for the industry. Again, numbers don't lie. God, I hope repeal all of Dodd-Frank and go put Pelosi and Schumer out to the woodshed and beat them. Another U.S.-wide housing slump. I found this one a little more interesting, only because it really goes through where the loss of the job is going to hurt the cash-strapped Americans. I'm a little shocked that people couldn't cover a month of their housing. I guess I'm shocked. I'm shocked that someone could miss 2 weeks of work and at that point in time feel that their only choice is to not make a housing payment. I'm also pleasant to see on how the people are, how mortgage lenders are willing to work with people. Interesting. I don't necessarily agree with it, but stimulus will not prevent the next leg down in the U.S. stocks. This is a very good read. The numbers are accurate. Again, it's an Elliott or Fibonacci retracement. Almost half of our gains on the way down. The numbers work, but I am scratching my head. It's just an interesting read for you. It's a long read for you, by the way. And will you have to pay back the coronavirus stimulus checks? For those of you that are getting one, here are 6 myths that you can go over so you know the money you receive, if any, is yours. With that said, any questions that I can answer for you guys? I've taken up an hour tonight. Are there any questions about anything that I can answer for you that you want me to put into writing? So I'm going to give you a second. Really, little more positive, there is a light at the end of the tunnel. We just don't know if that light is still going to be here in 4 weeks, sometime in summer. I made the comment that I don't think we're going to see the gains in the stock market till after the election, and that's if Trump wins again, because let's face it, Trump is a very market-friendly president. Lance makes the comments. Thank you very much for sharing what you plan on doing. I like you probably knowing it. Miss Bill, I like knowing I have a money manager that's working in my best interest and trying to make up something on the way down. Lance, both Keeve and I appreciate that. We appreciate that very, very much. Are there any other comments that you guys have? The world will change some habits. Which ones do you think will prevail? So I think it's going to be a process again. And I think, for example, movies and places that we eat, airlines, I think we're going to want some social distancing, where on every 3 seats, you know, 1 row we take up 2, 1 row we take up 1. So for every 6 seats, or for every plane, we're only going to deal with 50% occupancy. In all honesty, though, I think the Bravo, I'm a U.S. citizen, I'm a New Yorker. I think, in all honesty, we're going to bounce back quicker than we think, but I think we'll be slower in starting the normalization process. And, you know, we're seeing our test out in Georgia. Georgia, I'm going to say, is one of the first out of 2 states that's trying to get back to normal. We'll see how they do. Jim Caller makes a comment. Do you think attitudes towards China will significantly impact our strategy? I don't. In fact, in all honesty, I wonder if China is just going to be shit out of luck. I heard it for the first time today or on Friday that what if the U.S. or countries around the world look at China and say, you know what? We're going to forgive ourselves of the debt that we owe you. Especially if they find out that this was a manufactured virus and that if China lets it get out. British Petroleum paid heavily for about 5 years. Gave up 5 years of their earnings for an oil spill in our country and down in South America. We stuck it to them. I wonder if for the first time in forever, the world economies might stick it to China if it's ever found out that this was manufactured and that in some way, shape, or form, not that they let it out, but that they had some part in creating it or distributing it. And Maud's let me know, and she's a doctor, she would know. There's no evidence to support that, which I agree with, but they shut down the whole province of Wuhan, except for what, Maud? No one in and out of Wuhan except for international flights. Is there some culpability that nations will attach to China? You couldn't go in and out of the province. The people that I know that were there that were buying and selling that were not a Chinese nationalist had a couple days to get out, and then you were stuck there, except for international flights. Comment was made, people still want their cheap goods. I agree. A lot of our medications are cheap. Our aspirins are not necessarily, they call them pharmaceuticals, but not necessarily our prescriptions. There's a lot of basic medicine that comes out of China, but I don't know. Yeah, all the Walmart goods. That's a great way to say it. Walmart goods, Walmart medicines are made in China. It'd be interesting to see if that doesn't pick back up and if we maybe don't need those anymore because we find them here. China will prevail in commerce as they accept to work for less money and diligently. If we want to balance the game, we do the same or become lazier, possibly. No one can afford U.S. manufactured things. They don't have any money for emergencies. True, and don't forget, the comment there was, you know, no one else wanting to manufacture the medicines. I disagree. I could see something like Brazil picking up the slack. I see something like China. I think this is an eye-opener for economies that we don't have the dependency on China as much as we used to because we go through something like this. So the comment was made, what do you think will change? I think the biggest thing that will change is the dependency on China's cheap crap. I think governments won't make it so cheap as it comes in, and they'll play the tariff game again. I think we're not going to have the goods we needed, like masks and so forth, that governments are going to find the way to level the playing field so that we're not stuck in the same situation again. Remember, it's just my speculation, but common sense plays a big part in speculation. Do we need it to go through, 2 or 3 more pandemics? Some that maybe aren't reported by the media for us to forget? Possibly. But in all honesty, I think that dependence on China, cheap crap, I think they possibly shot themselves in the foot. It'd be interesting to see what reparations go against China. And again, not that you, and Maud, you'd probably know better than I would, not that you can prove or disprove man-made, manufactured, biochemical messing around, but maybe there are going to be some reparations on how they handled on the containment. And in all honesty, China shut down the world economy. Wasn't a depression, wasn't a leader. It was an above average flu that China shut down the world economy. Be interesting to see how things end up. Any other comments? All right, guys. Hey, have a wonderful evening. A pleasure being with you. I hope this little more upbeat and gave you an idea how to attack this market and how to survive it. If you haven't listened, go back to last Thursday's. I kind of harped on it a little bit more. This might have been a little bit better. But guys, this is not life or death. And this is an opportunity. It's still an opportunity. Let's take advantage of the opportunities. Let's weather the storms. And as things come back, we've added more shares. Let's make a killing. Have a great evening. Pleasure being with you tonight. And Keever I will look forward to seeing you tomorrow. Good night, everyone.